Hey folks, my name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. But what I'm here to do is teach you guys some different option strategies that you can then implement into your portfolios. But please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, you guys can probably tell I don't have my camera on. Well, what does that mean? Well, I'm traveling, actually in San Francisco right now, trying to get this camera to work one of these days, but I don't know if it's going to, because I love to show you guys the backdrops that I end up finding for some of these shots. The beauty in trading online is that you can do it from just about anywhere, and this is one of those places that you can go to and start trading. But it being a Monday, there's not a whole lot of economic data to talk about today. It's really just a product of the markets following through with some of the previous economic data that we've gotten. I think that the markets are really starting to realize, especially with some of the earnings that we've had coming out, that they're coming in better than expected. Some of the retailers are doing a lot better, Ulta being one of those. So markets starting to move higher. We can see here that crude oil getting a bit of a lift, moving up it to the 55 handle, but again falling onto that purple line we have right there that has acted as support and resistance so many times before, should act as resistance on the way up. And something to note here is that we do consistently see that we are getting lower lower highs and lower lows. So the market continuing to move down in trajectory as a bearish market here, and we are underneath the 200-day moving average and the 50-day moving averages as well. Just below that, we have that point of control, which is going to act as a magnet. So I don't really expect crude oil to start moving into the 60s anytime soon. I don't know that the economy or that the demand for crude right now, or gasoline and distillates, is really high enough to drive that market. But we could see this market continue to move sideways and fill in this little gap right here at the mid 50s on the volume. So I think that we're going to start seeing that bounce around, just like what we've been seeing in the overall equities as well. Sorry about that there. Let's get on to gold. Gold futures coming off, as we've talked about before. Gold is going to be a product of a flight to safety in these type of markets, where the equities, when they're selling off dramatically, we're going to get that lift that we've seen in gold futures. Now we're seeing the equities really start to bounce higher, and people are going to be pulling their money out of gold and throwing it into the equities as they see these earnings and the economic data coming out better than what really mainstream media is talking about. Here we've got the bonds down over a point right now. I think they're overdone to the upside. I don't think that the Fed is going to lower interest rates that much, despite the fact that we've seen a yield curve inversion. That is a signal for a recession, but I don't think that we're really seeing recessionary economic data here in the United States right now. It is a forward guiding metric, but at this point, it's more of a global issue and not so much here in the United States. And now that Trump has kind of let up on some of those tariffs heading into the Christmas season, we could really start to see our economy start to roll here. Here we have the Dow Jones Industrial Average, seeing it up over 280 points. It popped above that 23 Fibonacci that we have here. I was expecting us to kind of not really get that far ahead, but again, we have this low volume node right in here around the point of control, and that 23 Fibonacci is lined up almost exactly with that point of control. So a lot of times when we see that happening, we don't see the Fibonacci's acting like a support and resistance like we once did. So that being said, we could almost remove that Fibonacci line right there, because I don't think that going forward is going to act as that support and resistance. It has in the past, but that's kind of what's created that point of control as well. And then we can move on over to the NASDAQ here. NASDAQ moving higher and pushing up against the 50-day moving average, which just happens to coincide with the 78 Fibonacci extensions that we have there. But again, we've talked about this before. Once we bounced off that 61 Fib, that was like the roll of the dice at a point there where it looked like it could have been a continuation pattern, but we did get confirmation on Friday, and as you can see today, those people that were really banking on a sell-off are probably in the markets looking to cover that. Similarly, in the E-mini S&Ps, we're seeing the same situation, same chart pattern. Fibonacci is not lining up exactly that same way, but you can see this overhead. We've got the 50-day moving average lining up with the 23 Fibonacci here and the value area high. So as we start approaching that, we are going to see some of more resistance coming in, as we've seen in the past couple of weeks, right in and around this area. We've got that, it's lining up with 2940 in the E-mini S&Ps, but my line up here at 2956 I think is more of the support and resistance area, and especially because it's lined up with the value area high. Remember, anytime we get above those value area highs or below the value area lows, we really start to see volumes start to taper off, and the market's wanting to revert back to the mean. But having said that, I've been talking about this for several weeks, that after all of this market movement, we really haven't gone anywhere. And despite the fact that we are up big in the equities, again, we are right there at the point of control. So we could easily see the markets gyrating back and forth within a couple hundred points for the NASDAQ, maybe 50 to 100 points in the E-mini S&Ps, and with the Dow Jones, that market is much bigger. Because I've got my laptop set up here, I have abbreviated charts here. I haven't done anything, but I will tell you that my IBM is very close to being at 50% of max profit, so I'm going to be looking to cover that. And my SPY, remember I sold puts in there, those are coming very close to a place where I'm going to be looking to cover those also. So all of that being said, the market's moving in the directions that I want them. Obviously short TLT, that market with the bonds coming off is going to help that TLT trade as well. So I'm going to let my positions marinate a little bit longer and look to get out at my targets. All right, so that's all I've got for you guys. We'll talk again tomorrow and see if I've covered any of those trades. Other than that, I hope you guys have a great Monday, and if you can't take that, take it easy.